Hey, good morning, Forex traders. This is Vance Williams out of the Seattle, Washington area. I guess I started a few minutes early. Should be okay, though. Welcome to my morning Forex trading show. It's Monday, December 8th. Some of you emailed me and asked, when to expect a slowdown or different behavior. We could see this continued action until about the 18th or 19th based upon what I'm seeing now. Then we'll have a couple of broken weeks with Christmas and New Year's here in the U.S., both on Thursdays. The euro dollar did succeed in completing that next leg down to 122.50 that I've been talking about. And it did it in a bit of an unusual way, but I'll be talking about that. Everybody could start unplugging as early as next week. We'll just have to actually take a look at what the conversation is and see if traders are there. Major banks are in the action. So we'll see. I want to point out that when you do push on the player on the show here, like I just did, be sure to click on be part of the conversation right here. And what it'll do is it's going to actually give you access to links and stuff. So if you want to know when the show's going to begin, follow me on Twitter on this link. Or if you want to get some free books, click on this link right here, Forex Art of War, and that takes you to my webpage where you can get these free books, 8 Things They Don't Tell Forex Traders, The First Battle. So that's really good stuff, free. And I email maybe once a week. So you're not going to get overwhelmed by email. And then you can take a look at training options here if you're interested. Okay, so let me get out of there. Let's see. To start with, I want to stress that what I do on this show is for educational purposes only. This is not intended to tell you where to get in, where to get out, or to be investment advice of any kind. So I believe that you need to understand how to read probabilities. You need to know how to assess risk, manage risk, and you need to train yourself to execute these types of decisions. So those are the 3 major skills that you need to have. All right, so moving on in fundamentals. I've had a day to process the news of 100,000 more jobs than expected. In other words, they were expecting 231 and they got 331. Well, that must have been some fireworks, I tell you. I don't work on Fridays, so the jobs data always comes out on Friday. But I would say that probably gave us the fundamental impetus for a sell bias coming into Sunday yesterday for sure. But since this fell outside of my trading hours and trading days, I missed it. And looking at the charts, and I'm just looking at the euro right now, here's where the non-farm data was released. The first 100 pips of movement happened during the release of the data. So it would have been very difficult for most people to actually get into a trade because of the way the brokers manage pricing and things like that. And so what that did is that left you with a possible pullback here on Friday, which maybe you could have gotten into that. But if you came into Sunday, you would have been thinking, well, if I get in here, I've only got about 50 pips down to the 122.50 area. And 50 pips hardly constitutes a medium-term trade. So the medium-term trade, if you were able to read the fundamentals well, was back here, coming into non-farm, right? Which is, you've just got added risk to get this big leg down to 122.50. So I'm going to take a closer look here at this price in just a moment. In major bank trades this morning, a couple more successful banks placed sell orders in the area of the previous. Let me show you where I'm talking about. The previous supply area here for the pound. So they were getting in around 156.30 right here, kind of at the top. I get why they're doing this. But they're also selling into a 90 pip bullish move since the London Open. I don't really care for that, but that could work out really well for them. Let's go over to the euro. In euro trading, the major banks, you can see we're kind of near that bottom. We're at 122.54. 122.50 was kind of the target of the next leg down, and we're there. So if you were to sell a medium-term trade right now to 121, you'd be looking at no pullback whatsoever. So some of the banks are putting in sells right in this area around 12400 to get in up here and then take that next leg down to 121.50, 12100. So, of course, the holidays are going to come into play with this movement, but you just have to see how it shapes up. One of the major banks adjusted their stop on the U.S. dollar yen. They're in a buy. Another was looking to enter about 121.70 for the next leg up to 12300. And basically, in short, the major banks appear to be trading a bias of U.S. dollar bullish right now. But depending on which pair they're going to trade, that's going to depend on how they manage the risk that they perceive. So in the case of the euro dollar, if we go back to the euro dollar, if you're trying to sell the next leg down to 12100, you're not going to do it at the very bottom of the last leg, right? You're going to be looking for a pullback. So that would be an example of managing the risk on a US dollar bullish, euro bearish, right? So again, if you're looking for the next leg down 12100, you're not going to sell at the bottom of the last leg. You're going to look for a pullback. So there's an example of US dollar biased bullish, right? Bullish, but it's not in a position to enter right now. On the other hand, a couple of them are looking at, okay, the yen is in a pullback position for the next leg up to 12300. But the bank that I saw didn't quite get their price, which was around 120.70. So, and the pound, let's jump over that real quick. One or two are perceiving that this is a nice pullback area for them for the pound. Okay. So clearly they're bullish on the US dollar, but remember, it's not enough to know which way price is likely to go or what even price is likely to do. You also have to be able to assess the risk. And I showed you just now a couple of examples of the way they're managing that risk. And then, of course, you have to be able to execute. Keep in mind that I can't verify the accuracy of the information that I talk about in major bank trades. That's one of the reasons why I do not name them. But I believe it to be pretty accurate. Okay, now let's look at intraday price. Since I'm on the pound, let's go ahead and start with that. Right now, you can tell either by price movement below this barrier or even simply looking at the moving averages, the balance is still in favor of the sellers. The money's still shifted intraday, 1 to 5 days. That money movement is shifted to the downside right now, but today we have 90 pips of straight up bullish movement. For me, the fundamentals are not clear out of the United Kingdom, and it's the fundamental sentiment which drives my decisions about medium-term trades. In terms of highly precise trades based upon being able to read movement in real time, I'd need to see price either the moving averages cross over and reset and then look for a trade, or right now, as it sits, a move below 55.44, which is quite far. The other option would be to get price up in here and then potentially look for a trade, but you're going to run into all kinds of sell orders up here. So I'm starting to see what looks like the makings of a slowdown in a choppy market if price gets up into here. All right, so let's look at the euro price movement. First thing is this morning, if you were looking at price coming out of this important level here, and let me move this over here for just a moment, you can see this barrier is very obvious, and it held here, So 122.74 was the key level. Now, if we move back in here, let's drop down to the 5 minute and see what happened. So again, if you're going to be able to trade this kind of movement, you need to be able to read where the sellers are actually gaining an advantage, how strong that is. You need to be able to see that, and you can't base your trades upon symbols like chart and candle patterns. You have to actually see the movement. So here you see a new wave moving out that's 20 pips. So it's pretty weak coming out of that barrier. And when it's that weak, our traders would be thinking better price. So they probably would have been looking at getting in at 61.8 if they're going to trade it and keep their stop well above this barrier, maybe at the start point of the wave that moved out. And as you can see, had they done that again, and you've seen this on the show time and again, had they done that, had they read that risk and behavior well, they would have ended up with a nice little trade here. What followed was a very small choppy move of about 12.9 pips, which created a bit more buying interest. The sellers did jump on again, chop, 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 and there's just been nothing there. But in terms of what you'd be looking for right now, be looking for a move below 122.46 with enough strength to get in and out with good risk management. I think I missed telling you that a couple of the majors are selling the AU and the NU, the Australian US dollar and the New Zealand US dollar. They're looking for, pullbacks there as well. So that was part of my bias for the US dollar buying. Let me see what else I got. I'm doing the show a little bit early today just because I was up this morning. And members, I'm going to meet with you guys at 9:30 a.m. Eastern as the New York Stock Exchange opens. We'll follow the market. Some people may wonder why we have our live trading rooms that late. It's because I want to get the real trading out of the way before we get there. And it gives us a great time to deal with everyone's questions. And a lot of times trades do set up during those. Anyway, just going back to the website again, want to remind you guys that at forexartofwar.com, again, if you're be part of this conversation, you can click on this link right here, Forex Art of War, and that's going to take you into my site where you can get these books or learn about trading options. And always keep in mind, you can email me anytime you want, Vance at forexartofwar.com. I'm happy to answer questions for you. That's it for the start of this new week as we move into the second week of December. You guys have a great one. Cheers.